What is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Lindner. Happy Monday. Every Monday, I write the Bitcoin fundamentals report. You can get that by going to bitcoinandmarkets.com. And then I read through it, adding some flavor to the different sections. So I always talk about headlines, price, mining, and usually layer two, but I didn't find anything super exciting going on for layer two. So I left that section out this week. But anyway, so that's what we're going to go over today. If you're watching on YouTube, Rumble, like, comment, subscribe. I will check the comments at the end. And my guys on Telegram, just go ahead and put comments into the live stream post, and I'll read through those at the end as well. Okay. Make sure everything is set up. Okay, there we go. Telegram was not responding for a second. Okay, let's share screen and this is bitcoinandmarkets.com. I put out all my content here, premium content, as well as just a community content like the November price forecast competition. We do every month. We do a price forecast competition where you guess the price at the end of the month, and the winner gets $20 in sats over the Lightning Network. It's a fun way to just partake and have a little competition with the community. Also, when I do release other blog posts and podcast episodes, those will come out here as well. So you can sign up for free, get this weekly newsletter, as well as all the free content that comes out. All right, let's dive into Bitcoin Fundamentals Report number 265. I always start off with a meme, and I don't know why I just thought of this one. Usually I am scouring Twitter and Reddit and stuff and looking for the best memes of the week. But this one I wanted to put this on there. This is a classic from Bitcoin. People think when price goes up, they're like, oh, you're lucky, you got in easy. All you have to do is hold, and it's a straight line to the finish line of gains. But it's actually very, very difficult to hold, especially when you get FUD from people in the government, you get FUD from banksters, you get FUD from people that you have respected for a long time, like someone that we're going to go over here a little bit later in the news section. So people are fudding, and it's very hard to hold through the dips and not sell bottoms, and say, oh, this is over. I'm going to sell at 3,000 or something when the COVID crash hits or whatever the case is. It's very hard to hold. And yeah, just wanted to bring that up at the beginning. Okay, let's get into the snapshot of Bitcoin. So we are consolidating at the highs still. Of course, we'll take a look at a price chart here in a second. Media sentiment is neutral. I mean, there is a lot of rumors going on about a Bitcoin ETF. We're going to cover those. So those are like the main media narratives, but there wasn't anything big coming out this week, either for or against Bitcoin. So I left that at neutral. Network traffic is very high. We're going to cover the mempool and fees and all of that in the mining section. The mining industry is very profitable right now. Their daily revenue is increasing a lot at this right now specifically, and we will cover a chart of that. Days until the halving, 156. Keep ticking away. TikTok next block to the halving. It's coming. Before you know it, we will be at the halving. All right, price at the time of writing, it was 36,749. That's $1,700 higher than last issue, or a 5% gain since the last issue. Market cap is 718 billion. I like to make this a decimal point of trillion because just to symbolize we're going to a trillion, we're going to 5 trillion, we're going to 10 trillion eventually. So might as well get ready for that and say it's 0.7 trillion is the market cap. Satoshis per dollar, 2720. And if people are new finding this, Satoshis are the smallest division of Bitcoin. 100 million Satoshis go into one Bitcoin. And so you can buy a fraction of a Bitcoin. You can buy $10 worth of Bitcoin. You just get this in Satoshi denominations, kind of like cents to dollars, right? Except it's way more decimal places. I came up with my own denomination. That's a Finny. It's kind of right in the middle of the decimal places, and that is $3.68. Mining sector. Okay, so the last difficulty was a difficulty adjustment was yesterday, and it was 3.5%. I think the one right before that was also right around 3%. Next estimated adjustment is going to be negative 4% at this time, but it's only been 24 hours, so it's going to take a while for this estimate to get zoned in. I expect it probably will end up another positive adjustment, but we will see. Mempool, huge at 263 megabytes. We will cover a chart of that and go over the mempool here in a second. Fees for next block, $3.70 or 72 sats per virtual byte. That is down from last week. Last week was, I think, 82 sats per virtual byte. So fees, even though the mempool is getting fuller, it's going up in total megabytes, the fees are actually going down very, very slightly on the week. Low priority fee is down at $3.34. Lightning Network capacity 5,346. That is 24 Bitcoins less than a week ago, and that is about 0.5% down. So again, Lightning Network is just not catching on. I am using it more than ever when I'm using it once a month for the competition that we have to give out the reward. And it's great. It works very, very well. There's just not any demand for it. And we can see this in the capacity. Just it's leaking lower almost every week. Channels as well. Over 100 channels, fewer channels. And that's about 0.2%, sitting right at 62,153. Okay, let's get into, in case you missed it, this was the Proton that went out last Thursday. Massive breakout or fake out. So far, we'll cover that when we get to price, but so far we're holding these highs. So that is fundamentally bullish, I think, in the near term. Okay, community streams. I did not put out any podcast versions, but you can catch all the live streams of last week. These are my 3 most recent blog posts. My mother is in town visiting, so this weekend I didn't get a lot of work done, a lot of writing of any of these blog posts. So hopefully this week, even though I'm crunching out these live streams, this newsletter, I'm writing for Bitcoin Magazine Pro now. That should come out every Wednesday. So go to bmpro.substack.com to sign up for that. And I'm putting out my premium newsletter every week. So lots of writing. I'm working on these blog posts. It's just going to take me a little bit of time. But yeah, speaking of Bitcoin Magazine Pro, I put out Inflation is Dead, Long Live Safe Haven Bitcoin last week. So that was building out. They brought me on Bitcoin Magazine Pro to write my special flavor of macro. And I think I have done that very well. So far they've been happy with that, and I'm enjoying writing for them. So check that out, bmpro.substack.com. All right, let's get into the meat of the issue. So headlines, I always go through some Bitcoin headlines and macro headlines. This is a Bitcoin and macro show because I am an economist and that I've came to Bitcoin through gold, sound money of being a gold bug, through also being involved with macroeconomics and geopolitics, being in the military, and unfortunately knowing some of the relations and the way things work around the world from a military perspective. So this is what I do, Bitcoin and macro. We go through Bitcoin headlines and macro headlines every week. So all right, let's get into the ETF rumors. They are once again bubbling up. There is a brief window for a Bitcoin spot ETF approval opening up this week. It seems if they aren't approved this week, the formal process gets in the way of the batch approval approach. So remember, they wanted everybody speculating that they're not going to pick winners and losers, that they're going to approve all of these at the same time. Or maybe not approve one for some technicality or something, but most of them will get approved. If they can't approve all of them, they will. We saw this approach as well with the ETH futures ETFs that were launched, and we'll talk about that here in a second. But okay, this is coming from Nate Garachi on Twitter. I think he is Bitcoin. No, sorry. The ETFstore.com is where he's from. So he's an ETF expert, makes his living talking about ETFs. He's good friends with the Bloomberg ETF team. But this is what he said. And let's see if I can bring this up. It's not letting me bring it up. Let me make it a little bit bigger. Okay, so the spot Bitcoin ETF watch continues. Bloomberg's James Seifert explains that a small window is now open where the SEC could issue 19B-4 approval orders. The consensus is the SEC will batch approve spot Bitcoin ETFs because the agency wants to avoid being perceived as playing kingmaker in what will be an extremely high stakes and absurdly competitive market. So, these experts are saying that this could possibly be the largest single ETF launch. I mean, this will be a group of launches, but especially if you group all of these together and you count all of their volume, it could be the largest launch in history of any ETF. That record right now is, I believe, 2 billion in the first 24 hours. And it was just within the last, I think, maybe 1 or 2 years, there was some ETF launch that was just a rollover from another product into an ETF product. So all the existing holders kind of rolled over into the new ETF, and that's a 2 billion first day. These guys are expecting it to be bigger than that. Absurdly competitive market. So issuing 19B-4 approval orders during this window would help keep the SEC on the path towards batching up all existing spot Bitcoin ETF filings to launch at the same time. This window will close on November 17th. So that is this coming Friday. Let me make sure that's this Friday. Yeah, 17th. Because there are several issuers who filed later than the others. Those later filings will enter a public comment period at which point the SEC simply isn't going to approve them until that period is over in early July. Therefore, the SEC would not be able to include those issuers in any batch approval process, assuming the SEC is ready and wanting to move forward soon, and explains why this current window is potentially meaningful. It is important to note these 19B-4 approval orders would be for rule changes that allow spot Bitcoin ETFs to list and trade on their respective exchanges. The SEC would still need to approve each issuer's registration statements, which is much more important to actual launch timing and likely to come at a later date. Batching the 19B-4 approval orders is more optics than anything, but optics are extremely important in this particular high-profile situation. So very good explanation there. First, they will approve the listing and trading. So they had to change the rules to allow this new type of ETF to launch. And then later will come the actual approval of the individual ETFs. So that's a very interesting kind of two-step process. So I say Garachi also introduces a two-phase process where the SEC approves the rule change and then approval at a later date. Another very important factor is the looming government shutdown. So once again, we are in a looming period where we could be shutting down the U.S. government, at least the quote-unquote non-essential services and stuff. And that could be as early as this Friday. So it's corresponding to this opening of the window of the registration process. This registration process has opened up this little window where everything is aligning for some sort of approval like this. And it also corresponds with the government shutdown. So it's a very interesting way these things are lining up. It was the last shutdown that fast-tracked the approval of the ETH futures ETFs in a batch process. Bitcoin ETFs are a much bigger decision and product this time around, but this particular parallel could affect the process. Remember, all the ETFs have come into compliance with the unprecedented SEC clarification request. So that just to refresh your guys' memory, about a month ago, the SEC came back to these applicants and said, hey, we need this sort of disclosure, extra disclosure in your application. And that's the first time that has happened to a Bitcoin ETF filing. And they all have now come into compliance with that. So, they're all ready to go. BlackRock's filing actually added some verbiage to say that they are already actively constructing shares for launch. So they contract with a third party to start buying Bitcoin and start getting these shares ready to go to sell day one, right? And so BlackRock is already in that process. They said they were going to do it in October, start in October. We're now almost halfway through November. So BlackRock is ready to go. And they're not going to wait. Like, BlackRock wouldn't do this if they thought that they were going to get denied. BlackRock thinks they're going to get approved. They think so much they're going to get approved that they filed for a spot ETH ETF, which I didn't mention in the headlines today because I want to keep that shitcoins out of the letter as much as I can. Anyway, and the very connected individuals think the approval is coming before the end of the year. We've seen a lot of people like former BlackRock CEO and former SEC commissioners and big high-profile investors. They're all saying very similar things, that the ETF will be approved by the end of the year. Well, guess what? That window closes Friday. If they don't do it by Friday, there is uncertainty about the government shutdown, and there's also the misalignment with comment periods of some of the filings. So if it's going to be by the end of the year, it has to be by Friday. All right, so that's all with the ETFs. Let's go on to the next story. So Peter Schiff is losing his mind. I had a longer headline, just a snippet in here about him upping his doom forecasting. Like when doom wears off, you have to make it more doom. Oh, guess what? It's even worse than you thought it was. Just to get that fresh hit of adrenaline from the doom and gloom that Peter Schiff and other macro people always try to sell you. So Peter Schiff, the Bitcoin contraindicator extraordinaire, marked the recent Bitcoin pump with a tweet calling for a crash. Peter does not understand that high prices beget higher demand, because Bitcoin is a Veblen good. As price goes up, demand goes up, forcing price to go up. But that also it works the other way too. As price goes down, demand goes down. That's why hodlers of last resort stop the Bitcoin selling. They set the floor, because they are not affected by price going down, forcing their demand down. So it's an unequal side here. Bitcoin can have a floor by hodlers of last resort, but there is no ceiling. It will eventually go higher. So this is what Peter Schiff said. Bitcoin is approaching 38,000 as speculators continue to front run a new Bitcoin ETF. However, once that ETF is launched, all the speculators will have already bought. So when those buyers sell to take profits, there won't be many left to buy the ETF. Get ready for a crash. Of course, this is garbage. Yes, everything that you buy. Oh, crap. I clicked on it. Sorry about that. Let me close that. Everything you buy is a speculation. Every investment you buy is a speculation. Buying gold is a speculation by the same heuristic as he's using the term here. Bitcoin is sound money. It's hard money. It's the hardest money. And this halving is going to make it way less inflationary than gold is. Gold is actually inflationary. When people say that, gold standard was great and they're gold bugs or whatever, and that the government is just continually inflates the money supply. Well, what do you think happens to gold? 1% to 2% gold comes out every year. Gold inflates every year, the gold supply. So if you target 1% to 2%, quote unquote, inflation every year right now, that's about what gold is. I mean, the Fed is just targeting gold's inflation rate. Bitcoin doesn't have that problem because Bitcoin's inflation rate is 0, or maybe even slightly negative, which that's one of the worst problems I think about Bitcoin, is that it won't actually be a fixed supply, because people will lose Bitcoin every year, and so the available supply will shrink. But I think with new technology, new types of wallets, new types of key management and stuff, that will get less and less of a problem. But you don't want to have a shrinking supply of money. Anyways, okay, that's the Peter Schiff talk here. Let's get into The next headline, Bitcoiners check up on Peter Zion, another Peter, since his call at 16,000 for Bitcoin to go negative value. Zion's appearance on Joe Rogan back at the bottom of the Bitcoin price included a brief discussion of Bitcoin, where he claimed at 16,000 it was $17,000 overvalued. The main argument he made was the environmental impact. His other arguments were almost incomprehensible. He claimed that the fixed supply would make it go up in value forever. Hence, why it will go to zero. I mean, it just doesn't make sense. Also, that since it is not widely used today in transactions, it never will be, even though Bitcoin volume is amongst the top currencies in the world. I think it's like daily volume. I want to say it's top 20, maybe like number 18 or 19, maybe even 15 currency in the world for daily volume. So the daily volume of Bitcoin is ranking it in one of the top currencies. And it's growing exponentially and is owned by up to 200 million people globally. So 200 million people, that is a very populous country. I mean, that's more people than in any individual country in Europe, right? So it's owned by a lot of people around the world, and this go around, we could double, triple, quadruple that. How many people own Bitcoin? So anyway, that's that. I listened to the interview. Okay, so we listened to the song, the new banger that's out, Peter Zion taking on Bitcoin, on Friday's live stream, and people are memeing it hard. He has now responded via Twitter saying, quote, "However little you believe I care about Bitcoin, I assure you I care far less. Of course, the argument isn't that he doesn't care about Bitcoin, but that he doesn't get it or has ulterior motives. Bitcoiners simply looked up how many times Zion has tweeted about Bitcoin over the years, showing he cares about it a lot. I mean, there's something like 100 tweets that he's mentioned Bitcoin over the years. So he cares about it a lot, enough to tweet about it 100 times. All those years, and he knows the same tiny amount." So that's the Peter Zion update. Okay, let's get into macro. So CPI is due out tomorrow. I should be live streaming it. So follow me. It's 8:30 a.m. Eastern time. I am 99% sure that I will be live streaming it tomorrow. So make sure you guys watching on Rumble and YouTube, you are subscribed and you have your notifications on, because I will be live streaming this. Anyway, so CPI is on a path to normalization. August CPI came in a bit hotter than expected at 0.6%. You can see that's the recent spike over here. And then last month, it was back down to 0.4%. And October is being forecast to cool back down to less than 0.1%. It's like 0.07%. To be precise, the whole basket of prices is still rising. So that's what people say. Oh, this is a change in the rate of change, but it speaks to the normalization of CPI back to the post-GFC normal I've been talking about for years, of around 1% to 2%. And remember, 1% to 2% is the inflation rate of gold. So that's pretty good. That's pretty good. Okay, gasoline futures fell 8% in October, and oil prices were down 10%. All items less shelter should come in below 0%. So that's this chart here. You can see it was almost zero last month. It's been hovering around zero. And I do believe that all items less shelter will come in below zero. So that leaves shelter as the main force behind all this CPI stuff. Now, shelter is not calculated the same in different jurisdictions. It's calculated different in the US versus Europe, for instance. It matters much more to the US CPI than it does to the EU CPI. So what gives here? If we didn't count this, we would be down at 1% or 2% right now already. Europe is going to maybe beat us down to 1% or 2%, maybe zero. European PPI, that's the producer price index, which is upstream, from consumer prices. So those are the prices that producers pay, and they pass that down to the consumer. That is already negative 12% year over year in the EU. They're going negative for their CPI in coming months. Okay, but people, don't get me wrong here. This does not mean that there's no pain from high prices. It's exactly the opposite. Consumers are cutting back because of the high prices. These high prices have caused so much pain, caused demand to drop so much that prices have to fall. Demand has fallen, supply and demand. Demand is just falling off a cliff. So price will go down. Prices will go down. The pain would not be as intense if money printing were keeping up with CPI. So, a lot of people say, oh, in 2021 or whatever it was, we printed 40% of all dollars in existence and, money printer go burr. It's a great meme. It's not correct, though, because if we were printing money, especially if we're printing money higher at a higher rate than CPI, wages and the economy would be able to keep up with CPI, and there wouldn't be this acute, intense pain of having to cut back. There would be ill effects. Of course, there's always going to be ill effects from money printing economically, but there wouldn't be so much pain out there if wages were rising at the same rate as CPI. But they can't do that because there's actually no money printing happening. Base money, which is bank credit, is contracting as we speak. All right. With recession on the horizon, we should expect CPI and interest rates to continue to fall. Negative month-over-month readings are likely in the next few months. That is for CPI. Pulling year on year under 2%. Zero year on year is possible by mid-2024. I just threw that in there. I didn't calculate any numbers on this, but my gut is telling me that CPI is going to hit zero within the next recession. And if the next recession starts around middle of 2024, then CPI is going to hit zero around then. And it's going to go negative. I think CPI is going to go very negative actually this time. So we'll have to keep an eye out for that. All right. Next topic is freight recession is hitting hard. So reject rates, which are, quote, they measure the number of truckload tenders rejected and is an indication of relative tightness or looseness of the trucking capacity. As you see, they are at historical lows, meaning there is tons of slack in the trucking industry, which will drive prices down. So here is that chart. This white line down at the bottom is the current reject rate. It's below all these previous years, even 2018, even 2020, all these. And that means that they aren't turning anything down because they need the business. They need the loads. There's a ton of slack out there in the trucking industry right now. And I also link to this where the report that this image comes from. I link it here. It's that you can actually download the PDF right here, or this source for the chart will take you to that PDF. I think I should have got that working properly. You might have to put in your email or whatever to see it because it is through Freight Waves and they just collect your email to see their reports. But if you don't want to do that, you can download it right here. Okay. In addition to slowing trucking volume, shipping giant Maersk cuts 10,000 jobs and is forecasting an extended period of slow economic growth. Quote, the new normal we are now headed into is one of more subdued macroeconomic outlook and thus soft volume demands for the coming years. Prices back in line with historical levels. Inflationary pressures on our cost base, especially from energy costs, and also increased geopolitical uncertainty. And that's the CEO of Maersk, Vincent Clerc. All right. Transportation is a major part of all goods and is a major indicator of future economic growth. The common thread in this entire industry, from mega container ships to startup trucking companies, is the COVID lockdown disruption. We've heard for a year now that the supply chain backlog is fixed. Remember, we've talked about that many times on the show. People say, oh, the supply chain backlog is worked out. There's no more 100 ships waiting off Long Beach, California to unload. But that's not the end of the story. Okay. During this big backlog and this huge spike in prices for transportation, remember we looked at the 40-foot container rates that went all the way up to, like, I think it was like $20,000 or something, back down now to, I believe, under 2,000. And the Baltic Dry Index spiked, and then, I don't know, spiked maybe 10x, and has come all the way back down to even lower lows than prior to COVID. So a lot of these prices have spiked and come back down, but during that spike, they added a massive amount of new capacity. I heard one statistic that I think it was during 2021, something like 100 new trucking companies started every day in the United States. Some guy buying a truck or two trucks and starting up a trucking business. 100 a day in the United States. All of those people now are not needed. They're excess capacity now for truckers. So this new capacity was brought to market to deal with the supply chain backlog. Now the industry is going to deal with lower demand in a global recession, but with more capacity and probably more debt service. So if you borrowed money to buy a few trucks to start a small little trucking company, you owe the bank $500,000 and there's no business. You're screwed. And that's happening across the country. Yellow, don't know if there's another word in the name of the company, but Yellow Trucking Company, I think they're out of Seattle. They went bankrupt, and there was 2,000-3,000 workers that lost their job instantly right there. Lots of companies, lots of the big companies, big regional trucking companies are laying off hundreds of people in a go all over the country. So this can, not only is it a harbinger of what's to come, but it's just really bad economically for all these people. The capacity is too high, the volume is not there, and now they have all this debt to service. From the Bitcoin layer, they have a great chart showing the employment change in transportation, and it has gone negative. When that happens, it generally means we are currently in a recession. This might portend a very deep one when it happens. So you guys can see this. Look, when it went negative in 2001, that was in the middle of the recession. When it went negative in 2008 or 2009 here, we were already in recession. It smashed down negative COVID. That's a really weird recession. It was only 2 months. But so far, we're not officially in recession. And I do agree that the numbers, calculating out the numbers, we are not in recession. I mean, GDP last quarter was supposed to be what, plus 6%. So we're definitely not in recession by the numbers, but this is telling us that a big recession is coming. A deep, dark recession is coming. Okay, next section is price analysis. I do the protons on my professional tier on the website once a week. Tons of charts, give my Bitcoin forecast, both the near term, midterm, and long-term forecasts for the Bitcoin price. So check that out if you guys want more price analysis. Okay, last week I was watching the Ascending channel very closely. I wrote about it here on the letter. I argued that price would likely move to the top of the channel. And if we could close a daily candle above 36,500, a rise to 42,000 could be quick. Okay, so I got that first half, but the second half, it didn't rise quickly to 42,000. Price did break above the channel, but is now trying to find support at the important $36,500 level. And it was 36,600 at the time of writing. Let's look at this chart so you can see if we closed above this black horizontal line, I thought we were going to break out. We did break out, but it didn't go very far. And we are coming back to test support, it looks like, at this time. So we will have to wait to see how this develops. Let me take a look at the live chart real quick, if I can. All right, here we go. Let's take off some of this garbaggio. What are we sitting at? 36,850. So this day, I mean, we'll have to see how it trades for the rest of the day, but it is a red candle. Very, very solid and stable, though. There is no sign of impending sell-off here. All right, let's go back to the report. So the overheated nature of this move tells us the bull momentum is real, but that a temporary cool-off is still likely. I've been talking about that since at least Thursday with the market proton that came out on Thursday. Technically overbought. The risk of a downward consolidation is possible, but Bitcoin did continue the rally from a similar level back in January. So I didn't include that chart on let me hide this, on the report. But if we bring this up and we look at the RSI, relative strength indicator, and we go back to January when we were way up here, very similar RSI to today, it sold off, stopped at about 77 on the RSI, then continued higher, another 10, 15%. We kind of have done the same thing here. But you see how back in January, this price, it went up and stopped at about 23,000 and rolled over, found a bottom, and then went another third leg higher. So today, if we round this top, come down to, I don't know, 34,000, that could be a place to find some support and go back higher. I don't know. But right now, I don't think there is, the risk to go much lower is very low. I would say there's a 1% chance that we break 30,000 in the coming week or two, a 1% chance. So the downside risk is very, very low for Bitcoin. But okay, let's get back to the report. And I show that RSI here, that it is cooling off down to 75. So that's always good. You don't want to stay technically overbought on the daily for long. I mean, it can't. People that are against TA, they'll look at this and be like, well, why can't I just stay above 70 forever? But that's not how these indicators work. These indicators will reset. Now, it can reset two ways, and I talk about that here next. Let's see, where do I talk about that? Oh gosh, where do I say that? Anyway, it can reset two ways, and that is either price or time. So you can have a big sell-off, and the indicators will reset. They'll go back below being overbought. Or it can be in time. You can just go sideways for 2 weeks, and the indicator will gently fall back down into not being overbought. And then you'll have more, ammo and more momentum to go higher at that point. But you can't just keep going higher and higher and higher all in a straight line. Nothing goes up in a straight line. There's always going to be relative, daily volatility going on. But if you look at it from a weekly perspective, we are very, very bullish right now. So any pullback that we do have is not going to be very long. I could see maybe a couple weeks where we slightly move down and then we just turn right back around and go up. But we also have to think about this with the ETF. If this window is closing on Friday for the rest of the year, it's now or never. Are we going to be able to, cool off enough by Friday on the daily here to reset down into not being overbought to go higher? We'll see. We'll see about that. Plus, you can see there is a divergence here as the price is going higher. RSI is making lower highs. So there is that. But we can sustain bullish divergences on the daily chart for a long time. It can be weeks, months that we are having multiple bearish divergences, and the price will still go up. But there is that at least to consider. So how about GBTC? Well, the GBTC discount continues to weaken or get less, down to 11% at the time of writing. This is a barometer for ETF approval likelihood, in my opinion. Does this look like it will be neutral this week to meet this temporary ETF window? I don't think so, to be honest. So let's take a look at this. You can see that the discount is lessening. And at time of approval, it should be neutral. And it could go positive, maybe even then, right? This is getting better, but if you forecast just on this trend, you project this trend forward, it takes until the end of the year to get to neutral on this GBTC premium discount. So heads up on that. There is room for one more push higher this week. However, if there's another ETF delay this Friday, the price could, okay, that's a run-on sentence. The price could continue sideways to down over the next few weeks. So if there is a delay this Friday or there is no news, right? There is no news. It wouldn't be a delay, I guess. But if there is no news by this Friday, we could see price trend sideways or down over the next few weeks. That would reset all indicators and be ready for the next big move. On a weekly time frame, we are all systems go. Any daily volatility has a long way to go to break the weekly bullish structure. That is why everything is leaning toward minor consolidation or another push higher. The eventual likelihood of spot ETF approval remains very high, and fundamentals are extremely bullish. The path for the price is clear with little downside risk at the moment. Resetting indicators, i.e. consolidation, can happen through price or time. There it is. The cooling that is coming will not be via a crash. Therefore, in my opinion, it will come through time. So maybe 2 or 3 weeks, 1 or 2, 3 weeks of more boring price. Let these indicators get reset. No news on the ETF. That's what I'm leaning towards. No news this week on the ETF. And then eventual approval at a later date, perhaps pushed out into January, into the new year. Okay, so that is the price update. Let's go into some mining headlines. So Chinese Bitcoin mines, a threat to U.S. national security. This story is popping up again, this time on Zero Hedge, and it has been syndicated widely. I even saw it on oilprice.org. It's one of my, is it .org or .com? I can't remember now. But that's one of my favorite oil market websites to go to get oil news. And I saw this article syndicated from Zero Hedge onto there. It is about the Chinese miners locating mining facilities near other sensitive locations like military bases. And we talked about this maybe 2-3 weeks ago. This was widely reported. So in Wyoming, there is a military installation, and right next to that is a Microsoft hub, and then a Bitcoin mine moved in right next door to Microsoft, right next door to the military base, and it's Chinese owned. And there is this theory that they're there to spy. So back then I said, of course, military bases are also located at these crossroads of all these communication fiber optic lines and all of these hubs, because that is what the internet was built around. Started from military bases and grew out, expanded. So there could be a very innocent explanation. I think it is somewhere in the middle. So I'm not saying it's innocent, okay, but I lean towards being more innocent than being nefarious. Okay, China is crumbling. Money and people are desperate to get out. But there are also some nefarious people who could spy on the side while mining Bitcoin. The deeper significance of this the deeper significance is the international importance of Bitcoin mining. It is breaking into mainstream discussions in many ways. It is no longer something to be dismissed. It's a real thing, here to stay with geopolitical importance. Okay, next story. Bitcoin mining revenue hits yearly high amid ETF-fueled rally. Bitcoin mining hit 42 million, and that was higher than the previous yearly high at 41 million. But if you take a look at this chart that I pulled off of Y charts, you see they're saying 44 million. Maybe that's not including fees. 40, maybe the 42 is not including fees. I don't know. But anyway, this is huge because it will allow miners to sell fewer Bitcoin and stack in anticipation of the halving. Man, I have a couple typos in here. This is a very important dynamic. Number go up, feedback loop running into the halving. So as price goes up, miners have to sell fewer coins, which constricts supply even more, which pushes price up higher, which restricts supply more. That is a positive number go up feedback loop going into the halving. Plus, they want to do this. Miners want to stack coins in anticipation of future cuts to the reward, so the halving. So they will restrict their buying, and if their profits are going up, maybe they can access other sources of capital in the near term, so they don't have to sell any Bitcoin. That would be the best of all worlds, and it's one of these kind of built-in dynamics that are almost a sure bet for these miners and for these investors that would lend money to miners. So, all right, let's go on to difficulty. So Bitcoin's difficulty adjusted up yesterday by 3.5% in the first 24 hours of the new difficulty period. The next adjustment is estimated to be around -3%. Lots can change in that time. I do expect it to be a positive adjustment if price can remain stable to going up or going up. So you can see in the chart just this blip here. So that this one doesn't look like 3%. So it must have been only 1% or something. But this one was a 3.5% increase. All right. How about the mempool? Mempool has continued higher this week to a yearly high. Let's open this up. You can see way over here on the right, that is the highest that has been all year. This chart is actually goes up to 250 megabytes. And so we broke that seemed to be somewhat of a ceiling for the mempool. We have broken that. And this mempool will be different for different nodes. So, some nodes might have a limit on their mempool. Like they won't even include transactions more than 100 megabytes worth in the mempool. This mempool.space probably has a higher limit, and they are able to count all of these transactions, but it will differ slightly between nodes. The return of Ordinals has boosted the fees and traffic. Fees are elevated, but still quite cheap, except for the large Ordinal transactions. Apparently, some large JPEG transactions are costing the issuer $2,000 in fees. And let me bring this tweet up. It's by Bitcoin Isaiah. Each one of those big transactions is a JPEG, and each one is paying around $2,000 to inscribe. Yes, that's how expensive it's become to inscribe a single JPEG on Bitcoin. So let's take a look at that. Those big monster transactions are the JPEGs, and they take up a lot of room, so then other transactions can't get through, and they build up. All right. So let's talk about Ordinal some more. Ordinal traffic has shot right back up to a new daily high yesterday. So if we look at this chart, we can see it got all the way up here to, looks like maybe about 500,000. Remember, I was talking about this just last month or in September, October, that we were down here 3,000 daily, and now we're all the way back up here to 500,000 daily inscriptions. Most of them are still text. So down here on the bottom, it's broken out by these different types, and 99% of them are text only. There's very few image ones. This dark blue at the top, you can see they're kind of sprinkled in there a little bit. Really no application ones in red, and no audio ones either. So yeah, it's looking like 99.9% text inscriptions here, but the volume is back now to new highs, which is interesting. So I say most of them are text only, with very few being JPEGs. This is definitely the culprit behind the mempool and fee increases. Of course, ordinals have not become popular or more valuable, so this surge will likely play itself out soon. All right, and that's it, guys. That's it for this week. Check out bitcoinandmarkets.com, sign up for the free weekly newsletter. Make sure if you're watching over on YouTube or Rumble that you'd like, comment, and subscribe. Let's see. Let me check in the comments before we go. One of the best macro shows. Thank you, Dex Invictus. Let me go to Telegram and see if anybody has made a comment. If you guys want to comment in the live stream post there, let's see how many of y'all are still in the Telegram. Okay, a few of you guys here. I'll wait going once, going twice for a comment, question, concern. All right. Well, thanks, guys. Hope you have a good rest of your day, good start to your week, and I'll see you on the next one. Bye.